Hi everyone, I am back again with one more video on Banknifty. So we will be looking at with the Volflow.ai, right? That offers you the Volflow candle. With Volflow candle, what are the different probable signals we have got so that we could have taken a trade, right? So as you can see, I've opened the Bank Nifty chart and I'm using the seller stick chart. The value is 200. That means we need to wait for 200 seller transactions so that the candle will complete. Okay, so as you know, there was a big gap up, and if you look at the SAPE yesterday and the 2 days, the market was down. I mean, market was closed. So there's a high chance of the gap up. Why? Because the tariff war is also kind of on hold, and that's the reason people are kind of buying. Even FIIs are again investing money. So that's how they plan the game, right? They spread the news, they're taking out money, and then again with some kind of twist, they again push money to the market, right? So that's how they play the game, and that's the reason it was a big gap up, and suddenly the market started moving. So usually, I mean, I don't advise, but you know, the people are putting the trade, to ride the initial move itself, right? So if you're that kind of guy, you can take, but we are kind of starting a bull run, I believe, right? Because of these gap ups. So that's the reason I think, with bull run, if there is a gap up, immediately you can take some trade, but that is again a too risky affair sometimes, because if that big gap up was not powered by some news or some serious plans by FIIDIAs, that move will not last. So if you are participating, my suggestion would be you can do it with very less quantity. And the exit conditions, as you know, right? Whenever you see this kind of sudden surge in the chart, and you see some quantity and then price drops, you can simply exit your trade. But again, this surge would have spiked a lot of points in your in the options, as well as immediately would have come down, because you see how it moved and suddenly it now closed. So these are all the risky things, right? But again, if you have entered early, somewhere between 9:15 to 9:16 or so, then you would have got some good points by this move, right? By this candle. But again, it's not advisable, because not every time it will work, and sometimes you may lose, right? With hope, because thinking and deciding with a calm mind is a different thing, and with the running candle, where in a hurry to put the trade so that you feel like I'll miss the move. So that's a different condition of your mind, right? So I mean, I don't recommend, but if you are that kind of personality who doesn't want to leave any trade, even if you do that, you should do with very less quantity. Okay, so we talked about the exit condition, right? Because you saw sudden price surge, and you saw 10,000 people got trapped here, and the price went back, and that's where you feel like I had to get out from the trade. And obviously, no question about this, because it's a gap up and a rally, right? Market. So you will be always looking at call side. Okay, always looking at call side. So you will be looking at wherever you see a red patch occurring in a previous yellow line nearby clusters, and the price is moving above, that is where you should take the trade. But here the patch is quite large, right? I mean, it's around 72, and it is under like 40 30 plus points, right? 40 points patch. But for bank nifty, it is nothing actually. Honestly, when market is more than 1000%, 1300 up, so this 40 points are nothing. But if you want to grab an early entry, if you see a patch, if the price covers half of it, right, then you can take the trade, right? Simple. That's the equation. Because this time here, some people have stopped. If you look at the candle, right, the formation kind of opened here, went up, came down, went up, closed here. So what happened immediately? Some people have started pushing it back, because they want to grab some. Some people have put limit orders here, right? Buyers, basically. So that's the reason I think it went up to this point. Ideally it respects this yellow lines most of the time, but the way it is done here. but sometimes it crosses because it is not a everyday same in market. Sometimes it's highly volatile, people are doing news, lots of events are happening. Let's say an example, the RBI thing, right? The news affected by RBI or the budget days, right? These days are basically you don't find this respects, I mean this the lines are respected because those are not normal market days, right? They are basically biased and high volatility days. So because of that high volatility, price will surge. I mean, I was expecting this to come up to this level, but again, it kind of bounced back here. So there is no guarantee sometimes, but it's a risk trade if you want to do like that. Ideally, you should trade when you see a green cluster, when the price is completely crossed and then you see green clusters, then you put market orders. But I mean, you can put an order exactly as this level because the previous level of yellow, that is also okay. All right, so now let's talk about what are the other options we had, right? Obviously, we'll be looking for a call side, that's for sure. Now, while you travel right along with the timeline, you see the second candle has a yellow line. So this is also an important mark, right? You got a high volume there. So now what happens? The price kind of went up to I think 10 o'clock. Here the candle kind of closed and I think it got rejection, so it's kind of a red candle here. You saw it went up and then sudden jump here. So and again after jump also it went to down to grab some more liquidity. So this is I think a good entry. When you saw this line and it's kind of bounced from here, you should put a market order immediately. So that is where another entry of call you can have, right? And till what point you should wait? You should wait that these highs to be taken out. Once the highs are taken out, you should immediately get out because you never know if that is where the market wants to do. It wants to stop here because that's where you don't know. So you should get out when it crosses the previous high because there'll be chances it may reject. Or if you have sharp eyes, right, you can observe that wherever you see this cluster, the price falls below this cluster, you have to get out. Green cluster, you see clear there is a green cluster, right? All right, or another idea would be if you see a red bar, okay, and the price crosses the below that, right? The red bar shifted here. I know it has shifted. So and then price started trapping these people and crossing back. So that's where you can immediately get out from your trade. So these are some of the exit criteria based on your position size and how fast you can execute trade. You can take some of these ideas into your trading style. Okay, so now immediately when it came back, it's not like it directly, it doesn't fall like that straight. It again went back, grabbed some more people there, and then it kind of started falling. Now when it is falling, this is a big green patch. So somewhere it will take support. So ideal places are this yellow line, this line, or this line. So if this guy is crossing here, definitely it will be up to go here. So you should not put any trade here. So when you saw, let's say imagine out of you have not control on your FOMO and you put a limit order here and your order got hit, right? Then it kind of spike here and there and it again goes back. So you should never take an average trade in between. You should always wait, see what is happening here. Now in this line, this yellow line, it is bouncing, right? So when it bounces, you again put a order. That's how you execute your plans, right? Okay, so now what happens? So it's basically now highs, okay? Lower highs are maintained, right? So, or you can say higher lows, not lower high, it's a higher low. So it's a low, but it's a higher. Previous lows are cut. I mean, it's kind of not respecting, this candle is respecting all the lows. So that's the idea of, and again, and a new move has started here. The tick chart concept, it has to break. But again, I mean, all these trades are I'm giving an early stage. Ideally, if you're absolute beginner, you should wait for this candle high to be broken. So some candles should break this, and then you have to wait for a retracement of that to some point in a midpoint or somewhere, right? So after that retracement only you should enter. So by the time it kind of came here and then when the price goes back by trapping these sellers, you should enter. So ideal entry would be here if you're absolute beginner. If you're a risky guy, you can enter here because you saw a week, you saw all these sellers got trapped. Okay, so that is one way. Another way is also looking at the number, right? Even whenever the candle completes, you can just wait the candle to retrace, and whenever you see 5-10 points, from the low, the candle is moving, the price is moving 5-10 points up, immediately you can put your order. Because you can see, right, the 15,000 sellers, there's 15,000 and 7,000, double. So nearly double people are there, but still the end is winner to the the buyer kind of controlled this, because a lot of limit buyers who kind of hold the market, and it was the move was like that, the gap up was like that, that it will give a big rally. That's the reason. It was just trying to find out the point so that it can take support and then move on. So, and that's what happened exactly here. So you just keep continuing the rally if you are good at your psychology and you can hold on your trade. So none of the rules were broken. You can keep on holding and pyramiding. Pyramiding is a concept where you can add into your trades, right? If you are a trader mindset, you want to make big money, the idea is this is the pattern. You just have to wait, see where people are moving, you will build into more. Don't be into a kind of psychology that market will snatch your profit. So these are all winning, so you wait, you see people are trapped, you put an order here, right? Maybe you have 2-3 lots here, you add another one lot, 2 lots, whatever. Maybe every candle you add pyramiding one lot. That could be one of the easiest strategy you can experiment with. But not in every day, just in a day like this where you have a gap up and it respects the candle. It is not breaking the low. Sometimes what happens when we used to be the downtrend, right? So gap up happens, that's just to trap the users. So the gap up happens and immediately it will start breaking the low of that candle, first 5 minutes candle, and travels in a reverse direction. But it's not that it will completely travel, but it will find again a support somewhere below, and it will completely it will eat the gap up. So the gap up has no more value if you come to the market after maybe 15 minutes. Is maybe you will say the sellers are in control. So that kind of situation usually people have faced in the past, and that's the reason I think with this gap up also not everybody was confident to have some money with this gap up, because they have experienced those kind of trauma that market used to give, right? So it can have 500 600 point gap up, and you'll find it ends up with minus 300 points in next half an hour. By 9:30 or 10 you'll find market is around 300 minus. So those kind of things people have seen. I think that's the reason I think nobody will be excited with this gap ups also. Anyway, so but with Volflow you can look at the numbers and accordingly you can plan. And look at every candle. Almost every candle is kind of maintained here, right? The volumes are maintained. So not just the higher high and lower high concepts or higher low concepts, but also you keep an eye on this number, specifically on the volume buyer having, volume sellers are having. So it is kind of maintained. So as long as this is getting maintained, you keep on riding, with confidence you can ride. Obviously you have to plan an optimal trade in the sense optimal point where you should enter. So example is, let's say this candle, it has a yellow line here, you should put your trade exactly at this point. I mean, I'm saying with future, same thing you can also do with options, right? And again, you see a big volume here, obviously the low is here, but the next low is this one, so that is mid. So somewhere in the mid, nearby the mid, you can plan the next entry. Like if you're doing a pyramiding, right? Like every candle you want to add up the quantities, because you saw the ratios and the volumes are maintained, and that is where you make money, big money, specifically when you add up to your winners. And it's a very tough thing to do, because adding up to winners is like you need to have a strong mindset, because usually people have a mindset where they saw some profit and they immediately book. So that is how this goes. But again, not every day you find these kind of moves, right? So that's also another reason. Okay, now let's imagine you're riding this trade, and you suddenly saw something strange happen. The candle is kind of moving in a channel, and it broke the channel on the upper side. So when you saw that this is happening, do not expect the price will again further go. So the moment you saw some cluster like this, the wick is forming on the upside, immediately you have to get out. That is the exit condition. Simple example would be price crosses yellow line from upside to the down. That's a direction. Price crosses the yellow line from upside to the down. That's the direction. If it is crosses the yellow line, you should immediately get out. And another things to be, you should notice that exactly at this line, sellers have entered. Exactly at this line. Okay. Or either way. So if you're looking at the market, if continuously, you'll find this kind of things, and these are all the patterns, not the chart patterns, it's specifically the buyer cluster, seller cluster patterns. How the price is breaking this, you can immediately understand this, and you can recall. You don't have to memorize. If you see the market 5 days, 7 days continuously, and look for this kind of patterns without trading, guys. If you trade, your mind will be at PNL, how much profit, how much loss. If you do not trade, you can only observe and think. So first you observe, digest all these concepts, look at the patterns, how what Volflow is offering, then you do the trading. Then you can you'll parallelly maintain the because you have to do two kind of mind, right? When you're trading with Volflow, initial days you have to have two minds. One mind is basically executing order, pushing the order, exiting the order, that kind of activity has to handle. Another is observation. So to observe and act. So both has to be in correlation. Otherwise, you may lose your position, because even if you're seeing something you cannot to exit, that's also an issue. Okay, now that's where I think your rally is over. Now I don't think you should again look for anything else. Because you have to also look at how much market is up, right? Sometimes you'll find that market kind of gives 1,000 point plus, and then in again it goes back to 700 points or 600 points, like it goes down. But unfortunately we have not seen anything like that today. Hardly it kind of crossed those 300 400 points back. Usually that's kind of good pattern where you confidently you get a chance to re-enter, but here it's basically just doing the kind of support, immediately kind of took support and hover there for long period of time. So after that I didn't find any good trade actually, with this chart, because with the chart in the sense, we are following 200 ticks chart. So at least when you are breaking, let's say this candle, right? So at least I was expecting one more push below this, uh, up to this level. But unfortunately nobody was interested. Everybody was in a hurry to buy, and because as if like sudden some good things have happened in the market. And it was not at all retracing 300 400 points so that you can re-enter. And I don't think, after that I don't find any move at all. Even though small channels patterns are followed, but it is very difficult to kind of trade with this kind of chart, because it's immediately you plan something, it will be very accurate, otherwise you'll be confused. So after if you ask me, after 12 o'clock, not even 12, after this, yeah, after 12, so there is not much pattern. I was expecting this has to go back to the point where it has started the rally, and then give one more move till 3, but unfortunately it kind of hold in that upper area itself. So obviously your UMA and everything would be this area support. So that's, I think that was it, the market for Banknifty today. So it was kind of the initial move, or the move you have entered, let's say at 1019 maybe, yeah. So 1019, or maybe at here around 1059, or maybe at 10 o'clock, exact at 10 o'clock, sometime somewhere between 9:59 to 10. That was one move. Another move was this one. So this one is a pretty good move, but again your mind will be disturbed when it kind of takes a retrace. You might expect it will go a little more down, but again suddenly it goes back. So here it will be entries. And here what problem is, the way you pyramid here, let's say you had a big quantity, with this retracement you will see that all of your previous profits are also getting negligible, is getting near to zero. So those kind of things you have to handle. So if you have seen that kind of thing and wait to make a bigger profit, then it's a good idea. Otherwise it's very difficult to pyramid. Concepts are there, but it is very difficult for a trader to actually do pyramid unless he has experienced all those things and he has also money to adjust the positions based on your capital. So those are also things that matter. Okay. So yeah, I think that was the pretty much I think analysis. And if you ask me about future, I don't do that prediction, but you know the clue is basically we are in a bullishness now. So even for tomorrow also, I think we should only look for bull trades. And it might happen that candle will show somewhere in between going bull, and it can again make you fall to this position. Right? If it's going bull tomorrow, it can also retrace up to this. It might go back a little more down and trap some people, and then from there it can again move at tomorrow's 230 move maybe. But these are all prediction. You should not rely on that. You should only rely on the concepts. Okay. So one more important thing: why you should not take a put trade after this big candle, because even though it has crossed, right? It has crossed, but you see with a small candle is kind of hold and this candle got broke. So when this candle is getting break, right, there is a big chance that it will again go to the original position. So at 3:13, I don't know, everyone will be not be trading. Most of the people, they don't trade after 3. So but it was also a good move. But ideally these are all the adjustments, position adjustments people are doing after 3 for tomorrow's planning. But again, I mean, either you can also put a trade here, get some money, because you saw that the logic was followed, right? Even if this was a big red candle, there was no follow up, and suddenly you see a lot of sellers got trapped here, buyers have entered. So with this trap, you have to wait. You should not immediately enter. You have to wait the behavior of the candle. Open, started, it goes down, good. You saw some red, candle bounce back, saw some green, you enter. That's a simple thing you have to practice. So one particular move you have to find and practice. You should not plan 10, 20 formulas and you can never able to apply those. So that's the simple funda here. You just have to see the red got trap, you enter. And after entry, all that matters your mindset, how much you can hold, how much you can pyramid, how much you can follow the formulas, right? You see, even if these candles are getting weak at both the sides, you have to look at the buyer volume, seller volume, right? So here you saw the seller volume. Even after seeing the seller volume, it's higher than this. There's a bigger side pressure. So in the bigger side pressure means limit buyers are in control. And another thing you have to look at, let it break this low. Sometimes what happens, this week sometimes gets extended up to this level, 1 or 2 levels. You should not also afraid, because not exactly you'll not find people are putting their order. They put a little less, 1 or 2 levels. Like this is 2 levels. If you look at my mouse carefully, when I say this area, right, this is 2 levels, 1 level, 2 level. So they put another 2 level below. So that's the reason the week will be little more longer. So you should not after that it is getting break. No, it will be respected. Immediately after that it will fly. So if the candle is coming too close to the previous one, you should wait for 1 or 2 levels. Okay, and I mean, ideal breaking condition is 3, 4 levels. You should not take the candle which is actually breaking. Rather, you should wait for the next candle to retrace and see what is happens. Like what happens after the retracement. Like you saw this, the big break condition, right? Big break condition. Imagine you have entered here, right? You really don't know where exactly it takes support. It can take support here, here, here. These moves you should not capture. If you are capturing, you have to be very one lot, and any point of time you see the profits for one lot profit 200, 300 rupees are good enough. If you are playing at a premium of 3 to 500, so you should exit. You shouldn't expect more, otherwise you'll again go back. Like what happened here, it closed again, goes back to the original position. So these kind of breaks are basically to take the order and go back, and you'll be in panic. Even after that, it will come back, but it'll be in a very serious trauma condition. If it goes all the way back, you'll be see what can happen. A lot of anti, your psychology will be broken, and I mean you'll be thinking like why I kind of took this call, right? The market is going up, and suddenly you'll again kind of put a lot of order here, and again this will go back. So, and that is the place you started doing the same old mistakes that people used to do. So whenever something is not following your structure, you should avoid that. because it was not giving a retracement, right? Suddenly it kind of came to this level, so you should leave that trade. Okay, and with this buying condition, you also know that market is still not interested to do, go low. And even if you see this big candle, you should not be excited. You should rather see what is happening in the next move. And here the next move is completely different, right? So, and accordingly you can plan. So the idea is something small has to break, then you can enter. Not the bigger breaks. The bigger breaks will be never correct, right? This is a very big one. And it kind of broke a lot of candles. One, two, three, four, five, six, seven, right? So when you see one candle is breaking last seven candles, all the seven candles are kind of in a channel. So the concept I was explaining, right? Sometimes the weeks are taken out like this, see, this was the previous week and it kind of took three levels down, right? So you should not be worried saying, okay, it's kind of broke. No, not exactly, because these are all just few orders people put. And also look at this level. This was the immediate level. So it will act as a support and a candle bounce. So you should never ever bias by these things and enter. You should wait the activity. Immediately you'll see the price jumps. So even if jumps, you have to wait. You see some green, then you enter. And again, with this, if at this point of time somebody is entering, already the market is kind of, we should not enter the big quantity, because it is not in a good momentum. It has lost its momentum. So, and again, the time was around 1, but sometimes it gives a big move, but there's nothing much here. So the initial move was good, and that was pretty much, you should capture and leave. Okay guys, I think we're pretty much done. So if you like the video, you like those concepts, because all these high level concepts, psychological concepts, I'm giving you for free. So put a like and put a comment, so that everybody who is doing professional trading, they should start using this Volflow concepts and switch to professional platforms, because all other signals and indicators, they are nothing but, they are just based on price. But you need accurate traps where the people are getting trapped. And you also switch to the tick chart concepts, where you basically observe the market based on transactions, not by time. And I know a lot more things we are planning on top of this, so that you'll have much more clarity in taking your trades. All right guys, thank you very much. And we'll also publish some more videos on different other indexes. Stay tuned for that. Thank you.